Ago, WTI crude plunging today after Saudi Arabia was said to dismiss the prospects for an output agreement to stabilize the market. This is all ahead of OPEC talks in Algiers scheduled to kick off next week. In metals, gold slightly lower today, but it's been on a roll courtesy of the Federal Reserve, seeing the biggest weekly advance since June after central bankers opted to leave interest rates unchanged. Our next guest says the price action we're seeing today is a preview of what's to come over the next month. Timothy Evans is the chief market strategist and founder of Longleaf Trading Group and joins us now from Chicago. Let me just pull up a chart here on the Bloomberg. I know you can't see it out there in Chicago, but what we see here is the Bloomberg Commodity Index on the bottom, normalized. We see spot gold on top. We see a huge percentage gain in gold, 26% percentage gain. This is #BTV3762. Just talk a little bit about how the gold market has performed, how it interpreted what the Fed had to say on Wednesday.
Well, I mean, looking at the performance of gold this year, I mean, obviously gold has performed well. It's been one of the top performing markets. I think we were up about 24% last time I looked this afternoon for the year. We've also seen a lot of inflows into the broader commodity space. I mean, we haven't seen positive inflows into the broad commodity indices in the last 3 years. Assuming the numbers hold as they are right now going into the end of the year, this would be the first time that's happened. So, I think the appetite for commodities is, picking up a little bit, and the fundamentals that kind of underpin gold clearly, give buyers a reason to buy gold.
But gold tends to trade very differently from the other commodities, Tim, so how will that play out then for the rest of the year? I mean, especially if most people are at this point, or at least more than half, are looking for a December rate increase.
Well, I mean, this dynamic is the reason I'm so bullish gold in the intermediate term. The psychology of the market begins where, we start looking at, all right, here comes another Fed rate hike. What is the market going to do when the Fed ultimately moves forward? The issue is what happens to other markets, when the Fed raises rates. I mean, I think the lack of volatility in the global equity markets will probably change. And gold, having that dual personality, typically performs very well during more volatile market periods. So, if they don't raise rates, I think the upside is obviously there. So I think either way, gold's positioned to perform very well.
Tim, let me ask you a bit about oil. We've got this meeting coming up next week in Algiers on the 28th, 29th rather. Saudi Arabia issuing a statement today saying it doesn't expect there'll be a supply decision coming out of that meeting. What's your outlook for what's going to happen there?
I don't think we'll see much. I found it very interesting this morning. I read a quote from an unnamed Saudi official, speaking on basis of anonymity, but the basic gist of the quote was that, the OPEC needed to keep the rumor mill going, and that way they could control the upside and the downside of crude oil prices, which is obviously in their interest. So I'm not fully expecting any agreement that's going to impact global supplies of crude oil moving forward.
So what's a popular trade among your clients these days then, Tim?
There are some commodity markets that are performing very well. Natural gas, the supply and demand fundamentals have improved there. We've backed up the past couple of days, but we're putting in new highs for the year. Some of the agricultural markets are performing well based on some weather issues in Brazil. We've seen the sugar market perform extremely well, the coffee market perform extremely well. So you kind of have to pick your spots, but the commodity space does offer some decent opportunities.
All right, Timothy Evans there. He is the chief market strategist at Longleaf Trading Group in Chicago. Thanks very much.
Let's check the headlines now on the Bloomberg First Word News at this hour.